All right, guys, welcome back. In this video, we're going to cover one of the last sections in the Money Dashboard, which is the reports section. The Money Dashboard has a lot of very sophisticated algorithms that are going into creating all types of calculations and projections all of the time, okay? And what they do is they actually boil these down into a number of reports that I think are incredibly useful. So I want to show you that. So let's go to the reports tab up here. Now, there are a lot of reports to look at, right? Obviously, we have the balance sheet, gives us our current status. If we want to look into the future, we can actually do that, okay? Now, it's projecting out all of our assumptions about, hey, our investments based on how they've done in the past, on average, they'll continue to do so in the future. Inflation in the past will be similar to it is in the future. It's adjusting for tax rates and what's currently slated to be tax rates in the future, increasing for cost of living as they do all the time, so on and so forth, right? So they're factoring all that in, but based on how much you're saving, the investment returns, inflation, expenses, on and on and on, we can actually see what your net worth might be in the future. So let's just jump forward 10 years, right? So we're in 2022. Let's jump forward to 2032 and see what happens. Okay, total, we're at $1 million of net worth. Let's see what happens in another 10 years after that, 2042. Okay, we're already at 2 million. So we've doubled from 1 million to 2 million in that time frame. That's pretty good. This breaks down our assets, and it's showing that we've got a good amount of taxable assets, a decent amount in cash, some retirement, some Roth. Oh, this is real estate. So this is taxable, this is real estate, and then a little bit of personal property, so cars or what have you. Okay. So you can look forward, it'll project into the future. Now, right up here is where you select the report. Now there's some favorites. If you want a favorite added, then you just click the star, or you can not highlight it, right? If you click the star, it'll add to your favorites at the top. So let me just show you a few of the reports that I find extremely helpful as we go through this. So obviously the balance sheet is one of those, okay? I really like looking at the balance sheet. It helps me make sure that I have my head on straight, that I understand what my assets are, what my liabilities are. Helps me understand how they're titled, right? If it's joint or if they're singly owned, and make sure that I can make any changes there if I need to. We'll talk about legal ramifications in the future of all those different types of things, but it just gives me a really good snapshot of where I am, okay? Another report that I really like is this 5-year cash flow. And the 5-year cash flow breaks it down on a year-to-year basis and basically shows me, hey, here are your assets. So each column is a year, but it breaks it down specifically what I've entered into here, okay? So here are my assets, taxable, retirement, my cash, and my stock options or grants, the value of those. Cash inflows. So we got Jim's salary, Pam's salary. So $170,000 of total inflows. Outflows, we got living expenses. We have loans and mortgage. We've got insurance premiums. We have our taxes. And then what we're saving, what we've planned to save. And then total outflows. So right now you can see, hey, wait a minute. I actually am spending a little bit more than I'm earning. Okay, so something's not adding up here. And in this case, because I've been playing around with Jim's and Pam's finances a little bit, I ended up saving too much money, okay? So we can see, hey, we've set our goals, we have our saving set up, but it's too much. Our cash flow doesn't support it. So we actually have to back this down by about 4,000 or so, okay? So that's even. But you can look into the future and say, okay, well, what's gonna happen that year? Same thing. Oh, shoot, we're down negative 26%. $26,000 in negative cash flow. We've earned 179. We've spent 206. What's going on? Well, we can look in here and say, oh, hey, this is when Jim gets access and can exercise his stock options at Dunder Mifflin. And we've planned on him exercising those options, purchasing those. That's a $21,000 expense. And so something has to give. What is it going to be? Is he going to be able to exercise all of those options? Do we need to back off the other savings for a little bit so we have enough cash to exercise? Maybe he has enough cash here, right? We've got almost $59,000 in cash. Maybe it's okay because this is just going to pull from that. So you just kind of get an idea of what's upcoming. It throws in goals here as well, right? In 2024, you have the home down payment that you need to have ready. You're spending $21,000 on a new home for part of your down payment. Do you have enough for that, right? Are you gearing up for that expense? Because it's factoring it in, and so on and so forth. So you can jump forward year by year. You can look at education funding. You can come in here and say, hey, what about when they retire? What does that look like? Okay. Once Jim is 65, oh, you see here, Jim already retired and Pam's still working. Pam's salary at that time is going to be $113,000. And Jim's receiving his Social Security. So, this is how it works out. Then Pam retires a couple years later, and they've got Social Security coming in, and there you go. So this demonstrates in nitty-gritty detail where all our expenses are, where all our income is, and how is this money coming out. So we notice when they're both fully retired, they actually have an income of $104,000. They have total living expenses of $150,000 because they're still traveling. Don't want to give up traveling. So that's a $46,000 difference, a negative. So where's that coming from? Well, it's coming from their investment accounts, right? Their taxable or their retirement accounts. That's where they're starting to pull money from to supplement their retirement. Okay, so along with their Social Security income, they're going to be pulling money from their portfolio. Based on that, though, they're still going to be okay. Their portfolio is still increasing year over year. Their taxable investments are going up. Their retirement accounts are still going up. So they're actually not pulling very much money from their portfolio, which means it still has room to grow. So Jim and Pam are, by all accounts, looking like they're in a pretty decent spot. So that's 5-year cash flow. Let me show you another couple reports in here that I think are interesting, and then you can dive in here. There's a ton. Obviously, there's a lot of them. So you can dive in and look at any of these types of reports and whatever you're interested in at the time. One of the other reports, though, that I like is if you come down here to, it's all the way down here to the bottom. Yeah, here we go, income tax. Income tax is a favorite, so I'm going to favorite it here with the star. This shows what our tax estimations are based on the kind of income that we're receiving and other things like deductions that we're taking and things like that. Okay, so you can see this breaks it down by all years. So this is showing the amount of tax that we're paying from now all the way to retirement, and then how much tax we're paying in retirement. You can see it's pretty lopsided there. Obviously, when you're earning a couple $100,000 a year of income and you have a taxable investment account that's growing and paying off dividends and capital gains, you're going to have some tax to pay, right? But when you're retired, maybe your tax liability goes way down. So let's look at and dive into the first year here and just see what this looks like. So total gross income for them, 172, basically 173,000. You can click into that and it'll bring you to income. It'll show you, break it down, right? Here's earned income, here's investment income, dividends, capital gains, other income that you might have. So let's come back to income tax, and we're going to have regular federal income tax is $18,000. Okay, let's click into that and see if that makes sense. So we have our total income, we have our above the line deductions, we have our adjusted gross income, below the line deductions, taxable income, income base, tax table calculation, AMT, nothing, tax credit, 4,000. We have a couple kids, and regular federal income tax total. Boom. Okay. It's pretty sophisticated, and of course, it's an estimate. Okay. But this can really help you see what your tax liability is given this situation. Okay. Now, if you have stock options, this is important, right? Because different stock options have different liabilities as far as taxes go. So let's jump forward a few years to when Jim starts exercising options and see what happens here. Okay, I think we need to go another year. Now, if he had ISOs, for example, incentive stock options, he might actually end up here in the AMT tax bracket and have a credit that you can carry forward. So it's not showing up here, but it would show it. We're going to talk about what all that means in the future, of course. But bottom line is you can get a good idea. Then you have capital gains tax. These are estimates based on your portfolio. Okay, so it's not exactly what you're going to have there, but it's a potential. And then we have Social Security tax and earned income Medicare tax. Okay, those are FICA. Okay, payroll taxes that we all pay. You look at your pay stub and you see it deducted out. That's what those are. Nothing you can do about those really, but it's showing your total income tax and your effective income tax rate. So income tax is a phenomenal report. I really like it a lot. And then one of the last things that I actually like to keep track of is net worth. So you can look at your net worth statement. This breaks out the balance sheet, but it breaks it down into more detail. So specifically checking how much is owned by each person, taxable investments, retirement accounts, debt, everything like that, okay? It just breaks it down into more detail. Now, along there is the net worth history. So this actually will track your net worth over time once you start adding information in. So once you've added info in, it's going to start the clock and it's going to track it. So their net worth in January was $450,000. In February, it dropped that much. Why? Probably because we added a mortgage in there and some debt, okay? So because we're adding information here and there, their net worth has changed. But once everything's in, it's going to track. It'll follow your investment growth. It'll follow appreciation in your home. So if that changes, it'll follow other income that is coming in and being saved in other places. So it's going to track your history over time. So I like that actually quite a bit. Once you get some history here, you'll be able to say, hey, a year ago, this is where I was, and now I'm here. It's incredibly motivating to look at it. And the wealth tracker, which is similar. This is really depressing, but this tracks your total net worth in a chart format, right? Just like a little plot graph. And so over time, hopefully you see it going in this direction and not in this direction like Jim and Pam. But those are some other reports that I really like. Take a look at all of these. It gives you a really good snapshot of what's going on and then what you might be missing and what gaps you have. Okay. And of course you can favorite your favorites. Just click this little star. It'll pop up here at the top. So it makes it easy to find. So that's the report section, and check it out, and we'll see you in the next video.
Reports matter. Decisions follow.